Welcome to the Property Guide in ET Now. Thank you so much for tuning in. I'm Faye D'Souza. On the show, we give you everything you need to know about investments in real estate. Remember, if you have feedback or questions about buying a home, making an investment, getting a loan, or a legal problem you're having, write to us on the email ID that's at the bottom of your screen. This week, we're going to talk about some very interesting numbers that have popped up in our market. Bangalore has pushed Delhi to number 3. Bangalore is now the number 2 property market in the country. It does seem like our entire housing market is still in the doldrums. We'll find out what it's going to take really for our market to recover, and if at all that's on the cards. And to help us talk about all of that, Ghulam Zia, Executive Director at Knight Frank India, Jayashree Kurup, Head of Content and Research at magicbricks.com. Magicbricks is also our knowledge partner. Most of these organizations have come up with reports that are very, very interesting. I'm going to start with the Knight Frank report. Now, this is a quarterly report with an outlook of India's real estate sector. 6 major cities were surveyed between July and December last year. According to the report, Mumbai saw a drop of 9% in sales. NCR slumped to its worst ever performance, at least in the last decade, sales plunging 43%. Bangalore seems to be steady, but it does seem, Ghulam, like we've been talking about this for a while, and there is really no trigger at this point, in sight at least, for our property market to recover. Now, the buyers are refusing to buy. The sellers are not really sure what they want to do with prices at this point. I'm going to ask you, from an investor's point of view, if I have invested in real estate, does it seem like I've made a terribly bad decision at this point?
Well, if you have invested already, then little can be done. It also obviously then depends how long have you been holding on to your investment. If it's a respectable period, then all you know, you may still not be running out of your pocket. But if you have invested recently and expected it to double up your money in 4 to 5 years, I think you're in for a, I would use the word shock. Because at least in next 2-3 years also, we don't see that much of an upsurge in market, which will give investor returning the doubling up the money in 5 years anywhere in the country, except for a few strategic locations where the upsurge has to be driven by economic drivers or sudden change in infrastructure, which will be rare. But except for that, I don't think anywhere can you make up that kind of a money in real estate today.
Well, tell me this, it does seem like our office or commercial market is recovering. I know that Mumbai's had a fairly good couple of quarters in terms of commercial real estate. For a pure investor, is there a better opportunity right now in commercial?
Yes, indeed. Office markets have been growing steadily, and last 2 years we have seen very good growth in office market. In fact, if it is just for the purpose of statistics, I would say that we are not too far off from the mark that India has done its best performance in 2007 or 8. However, this market has little room for small investors to put in their money, because these essentially the new office buildings are huge office plates, floor plates, and big areas, campuses, etc. And the developers are not too keen to sell it to strata, to small investors, because their eyesights are entirely on the REITs, because there is where they will have big return coming in their way. So hardly any play for small investors in office market at least.
All right. So basically, net, it's not a good time to make a real estate investment. And if you have just invested in property, maybe an apartment or a home, it's going to be a long wait. Not for the next 2-3 years, at least, do we expect this market to recover. I'm going to bring in Jayashree here. Jayashree, you have a housing sentiment index that came in as well, and I want to go city-wise at this point. What Ghulam just told us is that Delhi has had its worst quarter in a decade. About a third of that, 2/3 of that market has been wiped out entirely in terms of sales. Your housing sentiment index pegs Delhi at -32%. Tell us what you're reading on the ground in terms of sentiment with investors, with buyers, and also with the people who are manufacturing and selling homes.
Investor is more or less out of the Delhi market. I don't think this is a good market to invest if you're looking at short-term returns. But the buyer has been extremely active, and like we've been maintaining for a while, the buyer is waiting for home loan interest rates to come down. And if you look at typically what the buyer demand is, it's for the lower priced housing, which is largely in the Ghaziabad, Noida area, where the consumers looking but not buying yet. Should you not buy in this market? I disagree with Ghulam. I think this is a good time to buy. Wait till the cuts that the RBI has announced translate into something positive for the consumer, which means that the consumer should wait for another 2 to 3 months.
Okay, Jeshi, I want to interrupt you here. I want to ask you simply this. When you say that you disagree with Ghulam, are you talking about people who are investing in real estate, or are you talking about end users who are looking for a home to raise their children? For which group of people do you think now is a good market, or the next 2 months would be a good market to buy?
For the end user who knows where he wants to stay, who's looking at properties, there's lots of stock in the market. This is a good time to look. Do wait for the home loan interest rate piece to play out, and so look at start searching today and then buy as soon as the policy perspective plays out. But for the investor, I think this is a good time to pick up low price property. Don't buy overpriced property. This window is open till maybe October 2015. The Navratri and the Diwali period is when I expect that the markets are going to show a significant bump up.
Well, Ghulam, one of the cities we're not surprised by is Bangalore. The fact that Bangalore has been steady, stable, hasn't shot up, hasn't shot down in any way. What are your expectations for Bangalore as a market going forward? There is a lot of talk right now about oversupply, because when you drive through Bangalore, you can just see your roads and streams of construction, and there just seems to be a lot of homes that are going to hit the market in the next couple of years. Is there a risk there of oversupply?
Not really. Bengaluru, to the contrary, does not have a huge amount of inventory overhang, if I go very, very jargonistic. In fact, last 6 months we have seen many developers have either delayed or have decided not to bring in further inventories in the market. So if I look at the current level of absorption, as we observe about 55,000 units were sold in last whole year. If I look at it, the remaining inventory in the market would not last even 2 years. It simply means one thing, that the availability is very low. And that is actually giving me enough of signals that Bangalore market is not here to crash as such. It's a pretty stable market. In fact, I would expect the inventory level as well as the sales to move up in times to come. And I don't think developers have any reason to expect any kind of a sudden change in the market.
Jeshi, I want to bring you in here. Let's also talk about Mumbai. It continues to be our strongest market in terms of sales. But in terms of sentiment of the buyer, where does Mumbai stand right now?
While there are some sales happening in the Mumbai market, our prop index shows that the demand is very, very robust at the base of the pyramid, and the supply is very, very robust much higher up. And there is a big supply-demand mismatch, which is why sentiment seems to go down. There is some amount of purchase happening, but will that take care of the existing stock? Currently, we don't think so.
All right. Last question to both of you. We've left Chennai, Hyderabad, Pune at this point, and there's also Kolkata. Ghulam, if I were to ask you to pick the strongest market there for the benefit of people who are watching right now in terms of sales, in terms of new launches, in terms of general sentiment on the ground, between those markets, which ones would that be?
My bet would be on Pune, because Pune has seen great traction both in office market, that means new jobs, as well as absorption of homes. And even prices have been going pretty steady in Pune market. So overall, amongst those markets, I would still talk about Pune. Hyderabad has a long way to catch up. The erosion had been severe, and for it to bounce back, it's going to take some time. Chennai has been subdued. It has remained very underperforming market for quite some time. While ITS overall is showing great signs of recovery, Bangalore has been on the forefront to get the maximum out of the pie of the improvement. Pune has been next in line, and then comes Hyderabad, and then ultimately Chennai. So overall, I would say if it is not Bangalore, then I'm talking about Pune.
All right, I'm going to give you a quick recap of everything we talked about in this segment. Ghulam, they're telling us that if you're a pure investor looking to maybe buy a home as an investment for the next few years, don't do it now. It's a complete no-no at this point in this market. Stay away from this market. Jeshi saying if you're an end user, so you're looking to buy a home that you're going to live in with your family, might make sense to wait a couple of months until we actually see that rate cut translate to our EMIs, then consider what you're going to do. Bangalore has replaced NCR on the leaderboard as the second market in the country. So we're now Mumbai, Bangalore, Delhi in terms of the size of our property markets. And of course, in the most stable markets in what seems to have been a fairly bad quarter is still Bangalore and Pune. Welcome back. You're watching the Property Guide in ET Now. Thank you for staying with us. Both Jayashree and Ghulam are still with us, and we're going to answer your questions in a bit. But Ghulam, we were having this conversation in the break where we talked about what to expect from Budget Day. And this is technically a budget with a lot of expectations, specifically in the housing space. But tell me this, if the government does take some concrete steps, and they're running out of time, a home for every Indian by 2022, that's the plan. We've already finished 1 year, so they have fewer years now to actually work that through. If that does happen, what is your expectation? What sort of impact will it have on the market?
Well, for sure, the real estate market of this country for times immemorial have been essentially catered to by private developers. I can talk about at least last 2 decades very comfortably for sure. Now, going forward, if government has to really execute the promise, which is giving house to everybody, that's almost 25 million houses that we're talking about in next 5 years. If that has to actually happen, it means government will have to swing into action. They will have to create multiple delivery channels, which means they will obviously not rely only on the current developers. They will use their own mechanisms. The government bodies, perhaps the PWDs or MHADAs or DDAs of the world will have to come in together and pool all their strengths to create this kind of a huge requirement for housing. It simply means that the control that the private developers had on the inventory for so long will be seriously challenged. And if that has to happen, then I think there will be a serious problem for developers, because there will be so many houses coming in the market which they will have absolutely no control on slowing down or taking the prices to the next level or bringing down, etc. It will be coming from the government's table, and that to me will be a big threat.
It's interesting. I mean, so far, none of these government bodies that you just mentioned have managed to deliver quality. So that might still divide the market a little bit. But Jayashree, I want to ask you, what are your expectations from Budget Day? Are we expecting big bang announcements, or at least expecting a roadmap of intentions in terms of homes for every Indian? And if that does happen, what sort of reaction do you think we'll see on the ground?
The home for every Indian, already the government has had a series of discussions with the state governments, and remember that the budget will only be able to declare the intent and the way forward. Ultimately, the state governments have to make their policies clear before the whole thing translates into a movement. From my discussions with the government officials, what I do gather is that till now affordable housing has always been far-flung areas, peripheries and so on. The government is very, very seriously talking about how to bring that back into the city so that people start occupying the houses that are built for them. There are examples of the city of Delhi, where Bhavana, Narela, areas where huge amount of stock has been created by the DDA and other government agencies, but they have no takers because there are no linkages. So in addition to the affordable housing policy, one big thing that everyone's expecting is some kind of roadmap in terms of infrastructure.
All right, so remember, big expectations from the budget that will be announced on the 28th of February. We're also going to keep a keen eye on any sort of clarity on the treatment of REITs in terms of tax as well. But I have a question that I know Ghulam is going to certainly enjoy answering. Sachin has written in. Now, he bought a one-bedroom apartment 12 years ago in the Hiranandani estate in Thane. He now plans to sell that apartment and buy a two-bedroom apartment in Hinjewadi in Pune, purely as an investment. Is this a good idea? So first of all, he's going to have to manage to sell in the secondary market, which by itself is quite challenging, and then roll that money over and invest it in Pune. What part of this would you approve at this point, or neither?
Well, I would definitely strongly approve the first part. Okay. In a little contrast to what you just said, selling this house will be very easy in my view, because market is absolutely hot. The second sales are the flavor. And the way I look at it, if the apartment was bought 12 years back, I guess the price that time would be more close to 2,000 rupees a square feet. So if the gentleman is in the market today with as much as 15,000 rupees price point in a matter of 12 years, yes, then I can't imagine the rate of growth that we are talking about. So that's the easy part of it. Selling it, making your money is easy. But the problem is to invest in Hinjewadi, in that area. The prices in any case are high in Hinjewadi, and then if you have to expect or have the same rate of growth that you have seen in Hiranandani, then this 6,000 price has to go up to at least 30,000, which in my view is not possible. So I would say if it is sheer investment, stay put. Unless you need liquidity, you have to sell. Otherwise, don't look at selling this and buying another property in Hinjawadi. Sheer investment as a driver, I would not recommend that.
So the advice you're getting right now, Sachin, is to just stay put. Don't sell if your investment is doing well. There's no reason really to do anything right now. Let's take another question. Imtiaz has written in. He's looking to buy a plot of land in Chennai with a budget of 20 lakh rupees. Please give me a good location. Jayashree, with that budget and making an investment in Chennai, what would you recommend?
In Chennai, you have a lot of investment options in the up to 20 lakh budget for plots. In fact, we see a lot of supply in the up to 20 lakh, but these are all in peripheral areas. So we look at two of the best options that you can get. You can get in Sri Perambudur roughly about a 1200 to 2000 square feet plot, and in Kelambakam along the OMR, you'll get a 1000 to 1200 square feet plot. These will be a little off the main areas. But look at it like this, you can spend 10 to 20 lakh or 13 to about 19 lakh and you can get these plots. Remember that these are all newly developing areas where you're going to get these plots, and you are going to be able to hold it for some time if you want some kind of returns, reasonable returns.
All right, let's quickly take another question also about Chennai. Manova David has written in. He wants our opinion about investing in a 2-bedroom apartment in Ocean Chlorophyll project in Porur in Chennai. He says his budget is between 50 to 55 lakh rupees. Would he be able to buy with that budget?
Yes, it's a decent budget. Porur, while it's a pretty central location in Chennai, still has the rates going in 5,000 to say 7,500, 8,000 in it to the highest of it. The proposition that Manu was talking about, the chlorophyll thing, I think fits the budget. The kind of prices right now happening in that project are pretty much in the range that he's talking about, because a 2 BHK in my view will be more in the range of about 1100 to 1200 square feet of area, and that will obviously fit the kind of budget that we have. 55 lakh will be good enough.
Also, very quickly, he wants to invest. If this is an investment, would you tell him to go ahead? Because going by what you said at the beginning of the show, you said hold off all investments into real estate at this point.
Well, as I said, my view is the same. If it is for investment, please steer clear. While this market is one of the better markets of Chennai, but still the rate of increase will not be as much to give you, to double your money in next 5 years, and that's
won't beat a fixed deposit, to say.
Indeed, yes.
All right. So this is it. And we're saying it over and over again on this show. This is where you hear the truth. If you're making a pure investment, you're not going to get a return that will beat a fixed deposit in any of the markets that we just talked about. It does make sense to consider other asset classes. If you are, of course, buying a home that you want to live in, then it might make sense to go ahead. Welcome back. You're watching the Property Guide in ET now. Thank you for staying with us. We're going to very quickly answer some questions. Reema Mukherjee has written in. She tells us her brother bought a 1-bedroom apartment of about 800 square feet in Prestige Norwood in Electronic City in Bangalore in 2013. And the price at the time was 4,000 rupees a square foot. What kind of capital appreciation can he expect from this project over the next 5 years? Will he beat a fixed deposit?
Well, as we've been watching, once again, it's 5 or sub 5% per annum kind of growth that we are watching in Bangalore market, and we don't see this changing drastically in times to come, which to me once again gives me this feel that why would you invest if it's only 5% per annum kind of growth. A small investment improvement has already happened. If I have to quickly talk about the current market price, I think it's 4,400 odd rupees a square feet from 2013 to today. So which actually fits the bill of about say 5% there, about 4 to 5% per annum kind of growth that we've been watching. So it will continue to be so. I don't see a reason why would you actually pick this property up only as an investor.
All right, unfortunately not good news for you there. If you have more questions, feel free to get in touch with us. Sachin has written in. He wants to buy either a villa or a duplex apartment in Gandhinagar towards Ahmedabad in about an 8-kilometer radius. His budget is 45 lakh rupees. Please give me some good projects. Jayashree, I want to come to you with this question. Does it make sense for him to look at the highway between the two cities? Because that budget could easily afford him an apartment or a home in either Ahmedabad or Gandhinagar. What would you recommend he does?
You see, the SG Highway is one of the hottest markets in Ahmedabad for a while. A lot of good premium development has been coming, and that is probably why he's looking at it. But the type of property he's looking for along that highway, there are not too many options. There are very local developers there. But honestly speaking, you're looking for a villa property. Like Faye said, Ahmedabad is not a very expensive market. I would rather you went into the city and looked at options there, because you can get within your budget.
All right, very quickly, last question. Sampath has written in, he's been allotted a 2-bedroom apartment by the DDA in Narela in Delhi at 67 lakh rupees. Please advise whether this is a good investment. He says his concern is the fact that it's so far away from South Delhi. Adding a little more money, he could be able to buy a 2-bedroom flat in Dwarka. Jayashree, would you recommend he goes ahead with that investment?
Go ahead with the investment. Getting a house in Narela at 67 lakh seems to be a bit much right now. But remember that the government has already announced that there are going to be commercial complexes in these new areas, and Narela, Bhavana, Rohini and Dwarka have been identified as the next target areas which are going to see high intensity growth. Now, considering that the metro is just a few kilometers away, if the government intends to pull the metro to Narela, the property values will jump. I would say, and if you go into Dwarka, Dwarka has more or less stabilized. Dwarka is not seeing a huge rise. So I would say that if you've been allotted a 2-bedroom in Narela, you should actually go for it.
All right, so there you have it. And if you have any more questions about investing in the NCR region, feel free to write to us. Our email ID is at the bottom of your screen. But unfortunately, we've run out of time, at least for this week. Ghulam and Jayashree, thank you so much for answering our questions on the show. Thank you so much for watching. Stay with ET Now.